historic day for India's benchmark indices for both the Nifty and the Sensex. The Sensex crossing that 80,000 level and the Nifty also hitting a lifetime high. We, of course, saw the banking stocks really outperform as well as FMCG majors outperform. To decode all of this further, the market momentum further, we have with us Nasser Salim. He is Managing Director at Flexi Capital and a market veteran. Thanks very much for your time. To begin with, what's leading to this spike and this surge in the market momentum?
Good morning, Sakshi. Thank you very much for having me on your show. So just two, three key points. I think, a lot of excitement around the HDFC news, which has come out in the last 24 hours. There is a lot of optimism on account of FMCG also. I think these are sectors which we've spoken to in the past. The forecast on monsoon has played a very important role. And that has also ensured that the FMCG sector is going to be rewarding. Banking and financial services is no surprise to us. In addition to HDFC, we've seen some of the other private banks also saw really high. Bank Nifty is all-time high. And I think one of the main primary reasons, of course, continues to be is that, as far as the banking and financial services is concerned, there's a lot of heavyweight lifting that's going to happen on account of newer projects that will get announced, which are, again, in line with the budget expectations. So I think one is that a lot of credit offtake is expected to happen post the budget. So therefore, banks and financial services are looking far more attractive. And in terms of sectoral plays, both at BFSI and FMCG and consumption and a little bit of manufacturing are sectors where, they're looking attractive from an earnings perspective. And therefore, you see this run up. Before this highs, the last few quarters, we've been checking and saying this openly that these sectors are undervalued, have been fairly neutral in terms of valuation, undervalued, whereas the larger indices have run up a lot. Now it's time for an FMCG or a banking and financial services, certain private banks to show that catch up, which is evident in today's market euphoric rise.
Right, but if we just look at when that Sensex milestone has hit and the milestones we are hitting, the pace at which we are really hitting these milestones now has become a lot faster, a lot quicker. Remember, in December 2023, we were discussing Sensex crossing 70,000 for the first time, and now here we are in July 2024 with the Sensex breaching that 80,000 level. So the pace at which we are seeing our benchmark indices hit milestones is also becoming a lot faster. Now, going forward, when do you think the Nifty and the Sensex will hit yet another milestone, given the pace at which we're seeing the record highs?
Sakshi, there is obviously with these milestones, I must, I repeatedly come and say this to you on your show, is that there has to be a word of caution because, it's very difficult to kind of put a number or a period by which this can happen. These are market determinants and factors that lead to market rises. There are multiple factors at play. In the last 30 odd days, we've been benefited with good news as far as India macros are concerned and micro. There was a strong, result that came out in favor of not a hung parliament, as you saw the NDA taking charge. That has kind of helped to ensure that there is stability in the day as of now. Of course, there are multiple constituents there also which may act up over the next few course of the period, over the next few months or years. But from a market perspective, it likes anything which is non-ambiguous. So a great election announcement there, a stable government outlook is something which the market is rewarded. Number two, a favorable forecast has something which has again been visualized, was expected, and now it is, as we are witnessing it across north of India, all of north of India. Number three, I think this entire banking and financial services expectation of credit takeoff and HDFC plays a very pivotal role in the BFSI space and on the Nifty on account of its weightage. And I think that is something, and even in the MSCI emerging market index. Now, all of these are at play, and the massive consumption story which India continues to believe in and have. And most importantly, the dependence on domestic institutional investors as against FII. The dependence on DII has increased, which is we become far more resilient. There are multiple investors in India domestically who are investing in money in Indian stock markets. Foreign institutional investors are looking at exits, but Today, if the same scenario had emerged 10 years ago, the markets would have been impacted harder. Today, we're seeing the opposite. The markets are non-reactive. With FIs pulling out, it is enough that liquidity that we generate in our system, within ourselves, within the economy, within India, that is continuing to drive the capital markets and making it
All
buoyant.
All right, and of course, we can't end this without asking you your key budget expectations, really. The full year budget, the union budget for 2024-25 is likely to happen soon. And so, therefore, what are your key expectations? Of course, we've heard announcements of landmark reforms and policy implementation, but what are your first thoughts?
My first few thoughts on this, too early to say anything at the moment because we're still trying to read and understand. But from the industry that we represent, I can tell you, certain benefits on dividend distribution tax. For example, dividends that are taxed in the hands of the investor. There is enough taxation that they anyway end up paying. Right? First, you pay tax and then invest that money. Then, when you make returns on that money, you also end up paying taxes on it in the nature of short term or long term. And then when you get dividends, which is again something is again taxed in the hands of the investor. So that's one thing that we're looking forward to say that our expectation is that if dividends can be removed, taxation on dividends can be removed on equity, that can be a good point. I think the other quick one is any tweaking on the long term and capital gain, short term capital gain period. Today, anything which is upwards of 3 years, it tracks in non-equity schemes, it tracks. It gives you a flat out taxation, which is as per your marginal taxation slab. Indexation was removed on debt instruments. We're hoping that some activity, some noise around that will be addressed. Debt funds were very good. Today, the parity as compared to a fixed deposit is gone on account of taxation arbitrage that they used to enjoy. So that's another quick thing that we would want to kind of see some announcements on. And number three, I think this entire manufacturing and these landmark reforms that they're talking about, whether it's Land Acquisition Act or whether it is the Make in India or the PLI schemes, if that can be further expanded to make sure that it reaches the end beneficiaries and and not just not on paper, is something which will again be favorable for some of these sectors and allied sectors.